Okay. Uh, Good morning. Wow, when I heard 44,000 pump jacks, I thought I was in West Texas. I mean, I thought I was in Texas. I'm from Dallas, so that's why I kind of like crazy. And plus, I was riding around yesterday a little bit, and it looked good. But I know there's a lot of angst around oil prices for sure, and we'll try to, do a little deep dive into that and see what's going on from a global perspective, and then kind of bring it down a little bit closer to home a little bit from that perspective. But thank you so much for being here. Thank you for Kern County, EDC, the Chamber, and Cal State Bakersfield. This is a great audience. It's fantastic. I mean, I think Kern County, and looking at some of the information that's been shared, I know there's some challenges. We all have challenges, but this seems to be that housing affordability and the prices, this seems to be a great place to raise a family. And I think you should be proud of that for sure. The median age, 31, I think, 0.4, millennials. I've been hearing about that theme for a while, and it's a big demographics for sure. And it took over my age group, the baby boomer. It took us over in terms of the size and population. So I think there's a lot of more room to run when it comes to the millennials, and we'll talk a little bit more about that as well. All right, Trumponomics. Is that on everybody's mind these days? I don't have an answer. Okay, I'm just going to be honest with you. I'm not sure what's going to happen, and I don't have any presentation because I'm just going to kind of go off some thoughts here and share some comments and things like that. From an agricultural perspective, from an oil and gas perspective, from a real asset perspective, we're facing a lot of changes, a lot of uncertainty, and I'm a real asset guy. Okay, I love land. I love agricultural land, oil and gas, timberland, things like that. So that's kind of the thought process that I want to kind of come to you guys with this morning, is that perspective. I was in D.C., and I hate to spend a lot of time in D.C., but it kind of gets into my skin a little bit. I was in D.C. about 3 weeks ago at the USDA Agricultural Outlook Forum. A lot of good, positive vibes from the agricultural industry, and a lot of, I'm not so sure type feelings. They're still waiting for the confirmation of a new Secretary of Agriculture. Sonny Perdue from Georgia is still, I think, waiting to be confirmed, one of the cabinet members that has not been confirmed. They were real positive. He's a farmer from Georgia. He thinks he's going to be very, very positive and strong for the agricultural sector. So they're looking forward to that. But at the end of the day, their concerns from an agricultural perspective are obviously immigration, border tax issues, and things like that. That's the immigration reform. Those seem to be the biggest concern. They're very pleased with discussions around deregulation, around discussions around corporate tax reform. Those all seem to be positive in terms of that. But it's kind of a balancing act right now as to which way they go. But overall sentiment that I got from that conference was more or less still a little bit on the positive front from that standpoint. From what we think will take place, between now and the end of the year, in terms of all this agenda items that have been tossed out there, and I don't have the full crystal ball, but based on an analysis that we look at and all the analysis and talk to a lot of people, I'm just going to throw this out. We feel like that corporate tax reform will happen before the end of the year. We feel like that there will be an infrastructure bill passed. Now, that doesn't say started, but that's a big, how we fund something like that is going to be a challenge. But we think there will be an infrastructure bill passed. From that standpoint, we think, obviously, Obamacare looks like it will be repealed in some form or fashion. Border tax issues, immigration, we think those are much tougher issues and will take longer to get through past anything like that. So we're pushing that off to the side. But there's a lot of action going on, and I think we'll get some things done in terms of helping the business, helping consumer sentiment. All the indicators indicate that the business environment, the business owner in general, feels more positive than they felt in a while. So I think that's kind of and I'm not sure how the feeling is here from Kern County perspective, but we think there will be a good positive vibe for the most part. Okay, what are some things that are taking place out there from a macro perspective that we think are going to continue to drive? The U.S. economy is overall doing pretty well. If you think about it, it's pretty well. The U.S. economy is strong, it's been resilient, and I think it will continue to lead. Last year, I think the pundits had a bad year. If you watch, the news channels and things like that, nobody predicted Brexit would take place. Nobody, was really very, predicting that we'd have this President Donald Trump that we have now. And a lot of things took place last year that nobody thought would take place. So we've shifted a little bit. So everybody's kind of scratching their head, deciding how are we going to digest all the change that we're facing. It's almost like this is March Madness, right? It actually, this is kind of what we're in right now from an overall economy standpoint is March Madness. Congratulations to the teams last night. And this is exciting. Who's got their attorney brackets all filled out? So what was it? Is a Buffett still offering $1 million for somebody who will get a bracket completely 100% filled? I don't see that happening. But anyway, good luck to everybody in terms of their favorite teams and so forth. I'm back from the Carolina. I grew up in South Carolina, North Carolina, so I kind of grew up on Tobacco Road a little bit. So the rivalries between Duke and UNC are pretty strong or whatever. But so we'll see how it all takes place in that standpoint. But here's some things that I think would be interesting and helpful. From an agricultural standpoint, we've got to feed a lot of people. This world is still growing in terms of population, okay? We're at 7.2, 7.4 billion people. All projections that I have seen, we're going to be at, in 2040, we may be at 9. It may go in 2050, we may get, go up into 10 billion. That's a lot of mouths to feed at the end of the day. And the U.S. is still the greatest country to produce food-related crops. We just do it. We got the best infrastructure. We got the best entrepreneur spirit. We got the, can-do attitude, and we're still good. So even though there may be challenges within the agricultural space, I think we're looking at kind of a slowly rise to a certain extent in some of our commodity prices. But I know this is going to be different out here. We're dealing with a different type of crop in terms of the nuts and berries and grapes and so forth. But we're pretty much consuming what we produce as a whole, and I think that's a good thing. But if you go back, parts of the country, the Midwest has had some record years in terms of some of their production because they've had favorable weather. So when, it's almost like you got to have a drought in order for commodity prices to rise to a certain extent. So they've had some record years in terms of traditional, your traditional grains, your corn, your soybeans, your wheats, and things like that. So I think we're going to kind of bump along there at those kind of current levels right now for the next 4 or 5 years. Just to be honest with you, I don't see a major change in terms of what we're seeing in that perspective. So I think agriculture is going to kind of stay in this little bit of a, I call it back to normal. We had a very big rise in commodity prices, very big rise in land prices in terms of most agriculture over the last few years. I think we're kind of going to be staying in a little bit of a more normal cycle, more lull, and everything's like that. But the underlying demographics, which is, the enjoyment, the health of what we're trying to achieve with whether it's almonds and various other products, is still there. And we're still going to be a strong producer and for U.S. consumption as well as for the world consumption. People ask about China. Is China, everybody thinks China's everything that drives everything. It is a very big economy, no doubt about it. China's actually had some slowdown over the last couple of years, but we see some more normal, kind of rise in their overall economy. Japan, places like that. Europe is actually more stable than people thought it would be. So So I think Europe is still okay. They've got some issues to work through. So we will get through. But I think from an agricultural perspective, it's still solid. My advice is to be patient. Be careful about leverage when it comes to whether it's buying equipment or land and things of that nature. We work with a lot of clients who are very focused on looking for different assets to diversify in. So we think agricultural is still a strong asset, and we remain very positive that that's a great asset class to own for a long-term perspective. Okay, let's go to a little bit of the energy space. Great comments earlier with respect to oil prices. WTI, I believe, actually opened up this morning somewhere around 48.5, something of that nature. So it's definitely off. And we'd hit 53, 54 not too long ago. This morning, the Department of Energy just came out and said that actually we've had a drop in inventory, and some of the stock of oil prices had come down a little bit. So it depends on who you're talking to, whether they're bearish or bullish in terms of oil prices. Okay, that's the way I entered. What happened? We all remember Thanksgiving 2014. What took place there with the OPEC meeting? They decided they wasn't going to cut. They were just going to keep on drilling. So that's when we started the fairly quick drop in oil prices from $100 or so, I think as low as $26 or something like that is where we went to. The rig counts, went way down from couple thousand to 400 plus. They've actually, since this time last year, they're up over 60%. So the rig counts have come back. That's not always the full story of the energy space, but it's one story of what's going on there. So, we had an energy revolution, as everybody would know, in the U.S. in particular with the U.S. shale producers. They were very successful. In spite of not having a strong energy policy, the entrepreneur spirit was there, and they have been so successful. We've been a victim of our own success to a certain extent, because we've been able to, through hydraulic fracking, through more proficient way to get the oil out of the ground. We can drill faster, drill harder, or frack harder, and more efficient with respect to the energy space. So we have created, to a certain extent, an oversupply is what I would say because of the U.S. Now we've got OPEC. It's been a game of who's going to blink first between OPEC and the U.S. shale producers to a certain extent. OPEC just recently came out several months ago, and they agreed to the 1.2 million barrels a day, drop, and then I think they had, non-OPEC countries agreed to another 600,000 barrels a day reduction. So we're at 1.8. Now that's going to come up. That was only like a 6-month deal, so that's going to come up again, and I think in May, and everybody's like, what's going to take place there? Is OPEC going to hold tight to that level, or what? There was a big energy conference in Houston last week, I believe it was, and OPEC is still playing this little game with the U.S. shale producers. Who's going to do that? U.S. shale producers have come back. There's no doubt about it. Rig counts have come back. They're drilling. The Permian is going strong, and a lot of other places are still moving in a positive way. So we'll see. But if somebody said, okay, Dennis, where's your best guess at prices? And based on what we think OPEC is looking at, what we think the demand is, and I think people are underestimating the demand. I think it's challenging to come at it. I think when you look at the numbers from the Energy Department and International Energy Department, I think they get kind of funny with some of the numbers, but we think there's an underestimation of the demand. So we remain not as bearish as a lot of people about oil prices. We think we're probably still going to be in this, 50 to 60 range for a little bit, which in some parts of the country is good. Some people can do real well at those prices. Some people need a little bit higher. Some people can even go down even lower. Supposedly the Saudis can be very effective at a much lower price. But I think they're starting to, from a budgeting standpoint and operating perspective, they need the higher prices too. So we'll see how that plays out. But we think we're going to be in this kind of a new normal, 50 to 60. We could get a little higher before the end of the year. We could get a little bit lower before we get there. But we think we're back in a little bit more volatility in terms of oil prices. Last week we had a big drop in WTI. I think that was a lot due to some of the traders. So it's more or less paper versus the physical nature of oil. So I think we're going to be in that range for a little bit of time. But stay patient, be cautious, and I think long term is still a good place to be from that perspective. But let me kind of just go a little bit more about real assets, and I want to talk about kind of on the housing perspective that you talked about, because housing is a big thing within the U.S. There's no doubt about it, but it plays into many other things as well in terms of investment themes or macro perspective. At our peak before the crisis, we were doing 2.2 million new starts a year, new housing starts, I think before something in that neighborhood, 06 time frame or something like that. And obviously, that was not sustainable. Credit issues took place, and then we had the collapse, and we got down as low as 450,000 housing starts a year. We're back now to about 1.1, 1.2. Based on all analysis and and information that we've seen, we'd like to get back to about 1.7. Something in that neighborhood would be something sustainable from an overall national perspective. That means we need the millennials. We need the millennials to get out of mom and dad's basement and go buy a house. Okay, they have what's that 18 to 34 year age group. What has taken place because of the economy and sluggishness and affordability and all this stuff, the millennials have stayed at home longer, and they have been less, anxious to start their households, less anxious to get married, less anxious to start a family. So that's usually when. But we still think there's a lot of runway there yet, and we think that's a good positive for housing, and that's a good positive for another real asset category, and that's timberland. At the end of the day, we got to grow some trees in order to support housing, those housing formations. And also, timber as an asset class, if you want to take volatility out, think of the biological growth of those trees. Okay, how many in this room have a smartphone, iPhone, or something like that? Okay, what did that come in? When you got that, what did it come in? It come in a box, okay? How many of you, my wife would shoot me if I knew I was telling this to an audience like this. How many of you have memberships like Amazon Prime and stuff like that? It's pretty easy just to go on the iPad or something like that, and boom, 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 the next day, a box shows up on your desk or your front porch with whatever you've ordered. I mean, we've become that type of society where it's so easy to order things, and some of these organizations and companies have made it easy to return things too. So packaging is a major, major part of timberland, another great real asset. People used to say, we lost a lot of our media. We've gone to iPads and Kindles and things like that, but we more than made it up in terms of packaging and other related fiber products, which is driving a strong demand in the timberland assets. So we'll continue to see that as a big positive, we think, going forward. So that's just some highlights there. I think we're going to be, it's be patient, try to avoid time to market on some of these asset classes, stay the course. Be careful about costs. We were advising and talking with folks, especially on the energy space or in ag space, be careful about cost. And at the end of the day, we think that if you stay with the real asset categories, you'll be fine. At the end of the day, we are very much focused on food, forest, and fuel. And that's kind of a theme that we think will play out through the changes, through this March Madness, through this economic uncertainty. We think, but be ready in terms of what changes could take place across the political environment, and I think we'll work it through. So happy to be here today. Hopefully some of the comments I made a little sense and will resonate. So thank you very much.